You think your biggest trading expense is commissions, or maybe slippage. Some traders blame spreads, platforms, or brokers, but that's not what's draining your account. There is an invisible tax that every trader pays, quietly, repeatedly, and almost nobody talks about it because it's too painful to admit. The most expensive habit in trading is the need to be right. Most traders would rather lose money proving they are smart than make money admitting they were wrong. If you've ever moved your stop loss just a few pips to give the trade room to breathe, if you've ever felt heat rise in your chest after a loss, if you've ever stared at the chart thinking, "There's no way the market does this to me," your ego is already bankrupting your strategy. And the problem isn't that you're emotional. The problem is that your brain is doing exactly what it was designed to do, just in the worst possible environment. From the day you started school, you were trained to equate being wrong with failure. Wrong answers meant red marks on your paper. Being wrong in public meant embarrassment. Being wrong at work can mean losing respect or your job. So your brain learned a rule very early. Being right keeps you safe. Being wrong is dangerous. But the market doesn't operate on that rule. The market is not a test. It's not a debate. It's not a performance review. It's a probability machine. And when a trade hits your stop loss, your brain doesn't interpret it as a statistical outcome. It interprets it as a personal insult. A losing trade feels like someone just told you you're incompetent. Your ego doesn't hear, "This setup failed." It hears, "You failed." That's why losses feel heavy. That's why you replay them. That's why you want an explanation immediately. And that's where the real damage begins. After a loss, something subtle shifts. You're still looking at charts, but you're no longer observing. You're searching. Searching for validation, searching for proof, searching for a way to be right again. This is not revenge trading in the obvious sense. This is something more dangerous. I call it revenge analysis. It's that moment when setups start appearing out of nowhere. A level that didn't matter 5 minutes ago suddenly feels key. An indicator suddenly confirms what you already want to believe. You're not following a system anymore. You're building a case. And here's the trap. Revenge analysis feels intelligent. You feel focused, engaged, sharp, but you're not trading the market, you're arguing with it. The market doesn't argue back, it doesn't explain itself, it doesn't care that your logic feels airtight, it simply keeps moving. And every time you refuse to accept being wrong, you pay the invisible tax again. Not always in one large loss, usually in a series of small, avoidable ones. One unnecessary trade doesn't destroy an account, but dozens of ego-driven trades will. In the most dangerous part, you can still be technically profitable while this is happening. Your P&L might survive, your psychology won't, because what you're really losing isn't money, it's discipline. And discipline is much harder to rebuild than capital. Here's the biological reality most traders never hear. When your ego is triggered, your IQ literally drops. That surge you feel after a loss, the urgency, the tension, the need to act, is your nervous system entering fight or flight mode. Blood flow leaves the prefrontal cortex, the part of your brain responsible for logic, planning, and restraint. It shifts toward the amygdala, the primitive survival center. You are not thinking clearly in this state. You cannot think clearly in this state. Trying to be disciplined here is like trying to solve math problems while being chased. That's why telling yourself to calm down doesn't work. That's why promising to stick to the plan doesn't work. You can't discipline yourself out of a biological shutdown. This is why professional traders look boring. They don't react quickly. They don't explain themselves. They don't fight the tape. They disconnect. They understand something most retail traders don't. The moment you feel the need to be right, you are no longer objective enough to trade. And objectivity is the entire game. The solution isn't motivation, it isn't confidence, it isn't positive thinking. It's separation. Think of your mind like a computer that's overheating. You don't keep opening more programs, you don't push it harder, you shut it down. This is why the two-loss lockout exists. 2 stop losses in one session isn't bad luck, it's a signal. It means conditions don't fit you today, or you don't fit the market. And at that point, you are legally blind to opportunity. Not metaphorically, neurologically. Closing the chart is not enough. Minimizing the tab is not enough. Physical distance is the only thing that resets an emotional ego. Close the laptop, delete the app for the day, leave the room, because as long as your eyes are locked onto candles, your ego is still in the fight. And if you can't walk away after 2 losses, be honest with yourself. You're not trading anymore, you're negotiating with hope. The market does not reward intelligence, it does not reward effort, and it certainly does not reward ego. It rewards survival. Professional trading is repetitive, emotional, and often boring. It's saying, "I was wrong, here's my exit," over and over again without drama. The traders who last aren't the ones who predict best, they're the ones who detach fastest. Stop trying to be the smartest person in the room, start trying to be the one who's still here next year. Because if you can master your ego, the money eventually follows. And if you can't, the market will take everything you bring into it. The choice isn't whether you'll be right this week, the real question is whether you'll still be in the game. If this hit uncomfortably close to home, don't try to fix everything at once. The next mistake most traders make isn't emotional, it's perceptual. They're reacting to the wrong information and calling it discipline. In the next video, Why Traders Chase the Wrong Signals, we break down how traders confuse noise for confirmation and why the market punishes that harder than bad entries. If you're serious about staying in this game long-term, subscribe, not for motivation, but to train the parts of your thinking the market actually exploits. I'll see you in the next one.